Hello and welcome to the Wednesday Bitcoin TA check-in. We're going to follow up with where we left off in Monday's video. Bitcoin has hit some of the key areas to the upside after breaking the 66,550 high here in the lower term timeframes on the daily. Got a nice close above there in Tuesday's candle into Wednesday and hit our key area up here at the run the highs above here zone. Now, in this case, I'm seeing a lot of bearishness actually at around 68,000. And, that's to be expected. 68 to 70 is the main area of resistance from this, really the third major high that was up here. So, yes, we had three over here. This is one complex high on like the weekly. Then we have our second high or third high, so on and so forth. So, in this case, we are seeing that lower term time frame resistance in this area. Between around 68.3 to 70,200. So essentially, this is the area that I call the 68 to 70 area that we've referred to quite a few times. You can see that there is quite a bit of resistance in this area, even throwing wicks up to the $70,000 area the last time that Bitcoin traded up here. But these closes coming in just below this 68,300 or so. Now, if Bitcoin's going to maintain its move to the upside, it has to close above Wednesday's high. And that's today for me still, but that's at 68,400. Then I would look for the move to continue up into test around 70,000 to 70,200 up here. Of course, remember that this high over here is at $70,000 even on spot price. Anywhere above $70,000, we're looking 70 to 72, which is essentially inside of this above here, the bull run begins area. $72,000 is basically where we had a daily double top. So that's the next area of interest. Should we see 70,000 to 70,200 closed above on the daily if Bitcoin didn't already try to head up and tag this area intraday? Now, to the downside, where would I like to see Bitcoin hold for continuation on pullbacks? I mean, honestly, it would be right in the pivot zone, 65 to 65.5. So that would give it a little bit of room just below the pivot zone because that is a daily level. That's from this high over here. This was the last high of the first major downtrend. And in this case, I would give it some room between 65 and 65.5. Now, a strong bullish pullback would try to sit on the high right here. This was the most recent higher high as it compares to this new higher high. And that's coming in at that 66,550 to around 65,850 or so. Now, if it does pull back further, that's okay. I would prefer to see it somewhere around this high. It could even dip down a little bit into the 64 to 64.5 region. No issue there. 64.5 is this high over here. But if we start seeing it tag around 63.8, eyes on. If it starts to close below there, we're looking for a more severe pullback that potentially could target, right back to that 62.8 to 61.8 here, all the way down to that 60,000 to 60,300 where we had the perfect close come in that initiated this move to the upside. Nice sweep of the prior low over here, and basically fulfilled the targets that we were looking for down to that, top side of the risk zone, somewhere around there was fair game at that point. And now the question that I'm getting a lot is like, is the run on? Is this it? Well, no. Bitcoin still has some key resistances to get through: 68 to 70, 70 to 72 over here, and then 72 to the all-time high at 73,835. And again, as I mentioned on Monday, I'm looking at the all-time high area as an area or a zone of interest between 73 and 75. Of course, if it shoots through there, 75 to 78, 78 to 80, mid to low 80s from there. So we'll cover a little bit more of that on Friday's video when we kind of do our wrap up. There's not too much going on here structurally outside of this nice little bull flag, a little bit deep on the bull flag, but I guess for those that love patterns, it still qualifies. So nice little breakout into higher high structure. What do we need to see from here? Well, we need to see higher lows. And realistically, a higher low just needs to come in above this low down here in terms of swing at 58 850 or 860 area, or 60,000 2 to 300. In this case, for spot, it's at 60,000 279. So basically the bottom side of the recover zone here at 60,000 263. As long as a higher low comes in above there, it's good. And then we have a trend reversal on our hands, not a completed trend, but a trend reversal to an uptrend, right? So it would be a higher high, higher low, and then move on. Any closures back below, especially even on the close open, it can still save itself. So even if it does like start to, close below 60,000 2 to 300, eyes on that low, it's very likely that it would close below there eventually, given and the extreme momentum or volatility that would bring it back there, but not a given. But then you would have to look at that low at 58,863 here. So, bullish pullbacks within the zone would paint the picture of immediate continuation. You're going to see when I throw on volatility here that how that kind of fits into the picture. But it's, I'd prefer for the bulls to see a nice bullish pullback that holds the pivot zone essentially. Maybe it dips outside of it for a wick down. Go wick fishing for some orders down here or even down here. You just don't want to see it closing back below 63.8. That's kind of where it's more than a pullback. It's still a pullback, but it would be a more severe pullback. Let's put it that way. Now, we've talked about kind of I went out of order and really kind of pointed out support and resistance. I usually like to talk about trend and then support and resistance, but it's kind of, one and the same here in terms of our conversation. Let's go ahead and turn on what I use to measure for volatility. This is a triple Bollinger Band set that I have created. I did not create Bollinger Bands. That would be John Bollinger. This is just a triple Bollinger Band set with a cool feature down here called BBWP. This tells me that we're in an expansive phase. Now, we're not in an aggressive expansive phase yet. You might think this was an aggressive move to the upside, but it's still within the lower second and upper second boundaries of the Bollinger Bands here. Let's go ahead and zoom in so it's a little bit cleaner and a little less cluttered on the chart. Now, if we start to see, and you can see there's confluence right here at the upper second at around the 60,130. If Bitcoin starts to push up here, you'll likely see the band adjust intraday by this upper second right into this this pivot zone, as I think I've called it, right? This is the pivot zone. Let me just make sure. Yes, that's the pivot zone. Now, closing above it would kick off more aggressive expansion. We are getting price volatility expansion. We are closing candles above the upper first, which is going to kick off volatility expansion for Bollinger Bands in this case. Above the upper second, it starts to get more extreme volatility or into the more extreme volatility areas and usually some bigger moves. So volatility is increasing. We usually see bigger moves. That can be on a wick intraday. That can be, on a close that gets continuation or, starts to initiate a move to the upside that could get rejected, a whole bunch of different things. But closing above the upper second would kick that off. And then we have to keep a close eye on it because in the high volatility environment, it can get the continuation if it meets the horizontal support and resistance conditions on closes above in this case. So like closes above 70,200 or so, we would look for continuation. Just so happens the upper third is right there as well. Just above it at around 70,550 or so. And, then we're looking for more aggressive expansion into the highs. If it just kind of walks the bands up and it's right up against the resistance here and then starts to come back down and especially lose the upper first, that is going to start to paint the picture of a possible cool down, because that's a revert back to the mean or basis here. And, wouldn't be unexpected, but we would be looking for a little bit of a cool down in price action volatility. Now, any closes below the upper first, well, essentially where would we be looking for? We'd be looking at closes under around 65,500 or so. Then from a volatility standpoint, we look to the next support at that 63.8, of course, not ignoring any of the more recent areas that we would want to see flipped into support, right, along the way, whether it's within the zone or outside of the zone. But if it does close below the upper first, we would be looking for mean reversion. And then, a little bit of a volatility cool down, likely targeting somewhere around the basis band. It can get front run, doesn't need to exactly hit it. It can even get wicked through or closed below. If we did see any closes below 63.8, we're likely looking at the basis band getting hit. That is a 20 simple moving average there. Any closes below there, if it didn't already go wick fishing down lower, then I would, entertain moves back to where the lower first is, which is around, it's just under $61,000 at $60,900. Anywhere below there, well, you can see there is support at that 60,000 to 60,263 or 60,300, as I typically call it. If that area is lost, you see the lower second is right there at 58.4 right now. Lower third, obviously, if that area is lost, and especially closed below, well, none of that would be good for the bulls, but the bears would have fun. You can see the lower third is all the way down there, kind of coming into that support area at 55,850. Realistically, what do I want to see for the bulls? Like I said, on pullbacks, I want to see them holding this zone. We can get wicks down into, the 65 to possibly even 64.5. Start seeing it get lower than that, eyes on 63.8, and possibly lower if it starts to close under there. But strong moves back down within the pivot zone, 65.5 and a close, right around that upper first, just fine. I would still be entertaining continuation to the upside as long as it's closing above the upper first and within the zone on any pullbacks. If it's just going to continue, right here, right now, Wednesday into Thursday, obviously the Thursday candle's open. It's still Wednesday for me. We need to see closes above that upper second and a reclaim of this 68,300 level. That would kick off more extreme volatility measures, or more extreme volatility. And then we'd be looking, somewhere around that 70,000 and above. And that's what many are expecting. So just because, and I have to tell you this, just because you're expecting it doesn't mean it's going to happen. We kind of called this area out already on Monday. We've talked about it a lot if you watch the videos in terms of areas of interest. 68 to 70 is the zone. Many are dead set on 70 getting tagged and then rejected. And, I'm not in the business of predicting the future. That's why we look at things the way we do here. All right, let's go ahead and look at momentum. We can see that a regular Stoch is starting to get into the overbought zone. That means absolutely nothing. You can see that it can hang here for quite a while, or not in some cases, just get rejected. Doesn't really matter. What matters is this is a regular Stoch, not a Stoch RSI. Stoch RSI measures the velocity of the RSI. We already use an RSI, so I don't use a Stoch RSI. And in this case, I use a regular Stoch. It's running a 6.3, or it's running a 6.3, 14, 255 look back. Let me double check. Yeah, it has to be. It's like the crypto op. Yeah. KD read. This is not going to look like that. But if you're going to run this, you run it at a 6.3, 14, 255 look back on a regular Stoch. It measures close over close price momentum. This one has pivots. This is a paid indicator with a bunch of other crap on it that you don't need. You can find plenty of free ones that have the actual pivot number for where this momentum indicator would cross back down in this case, where the K read would cross below the D read. And that would be on closes below 64,250. So there is room for a pullback here. But if it starts to close below there, you will see at least an initial cross down, depending on where things end up. All right, so nothing too crazy there. Bitcoin has played out these two drives of hidden bullish divergence. It's in the bullish control zone here of RSI. It's at a 68 read. A lot of people have like that midline 70 read up here. Is it in an area where a pullback is likely? Well, looking at the fact that it's right up against resistance, it has to close above the upper second and really kick off volatility expansion. Lower term time frame pullbacks, are absolutely available. We've seen it on 2 candles in this zone, kind of just front running that resistance there. And that's one of the reasons why we talked about areas of interest for a pullback. That doesn't mean it's going to pull back. Volatility is still expanding, 67 over a 36. This has got some juice. And in fact, I believe if we get rid of the support and resistance here, maybe we'll bring it back for just a moment. But let's go to the 2-day. Because the 2-day just opened and it's also spiked into its upper second standard deviation. We didn't get like a tight pinch on the bands here, so it is kind of a range setup. But if we start seeing closures above the upper second at around 68,500, then we would kick off more aggressive expansion to the upside, targeting around $70,000, and then the highs should it break above and especially close above that area. Now, if it didn't already run those areas, then we'd be looking for those areas to get run on any closes above 70 on expanding volatility for the 2-day. This is technically this is a goofy structure on the 2-day. So you've got a higher low swing, equal low, essentially close, right? Got higher high, higher low, lower high, lower low on a close end swing, and then higher high. Really, it's a bull flag to then go up a test. Is there measurement tools for that? Absolutely. We can measure that. I don't often show you fibs, but there is trend-based fibs that you can use, and you could kind of go like this, and you can say, hey, it hit the 618. So if it's going to get above the 618, where do we look next? Between like the 702 and the 786 up here. If it can get above and close above the upper second especially, then we're targeting around $69,500 to $70,000 at the high here. And then, 71 to 72.5. And then realistically, it's up there to the one spot, or the 100% of this move here would put it somewhere around, just shy of $75,000 at 74,500. So, there is some confluences between fibs and stuff. You could even pull a regular fib and you could see the same thing. Just from the move off the low, you can see that, it's not going to be as clean, but, 1618 is coming in around that 69, 2 to 300. And what you're going to notice is if I put on the accumulation distribution area, it's right in the middle of this zone up here. That's not really the perfect fib for this zone, but there's many different ways that you can pull fibs depending on your school of technical analysis. And it's probably a little bit more apt to be pulling these on the daily for stuff like this. You'll see that this hit the 1786 is what's kind of holding this down right now. So there's some fibs to be pulled here, and you could even say on this pullback, where do you want to see it hold? Well, it kind of already held the 50%. Well, this would be the new fib, so you'd want to see it hold like the 618 at worst. But in this case, 786 to the 888 here. That's getting a little deep in the weeds, and there's a lot of different ways that I could pull the fibs. We could pull this one for extensions, for instance. And the reason why I'm bringing this up is because I had a few of you in my chats, DMs there, asking me about fibs. And if we were just going to pull this move, you can see that that's where I'm getting just the initial move before the pullback that held the 50% fib down here for you GAN traders. We're getting continuation above the one spot to the 1618 is typically where you would look. But of course, from volatility metrics, we got to close inside of that resistance and above that upper second, right where that overhead resistance is on the daily. So essentially 60,300 above, we can start targeting, 69 to 69,250, possibly up to 71 to, hey, look at that 1414. If we were going to look back at this, it's just around the high here, just shy of it. In this case at 73,400 instead of 73,835, but it's fairly close. So there is some confluences there. And there's even lower term time frame stuff that you can find confluences with, right? That really doesn't matter too much, but point being is Bitcoin is starting to get this expansion on the daily. It's starting to get expansion on the 2-day. The 3-day is going to close today. It's not ready for expansion yet, but closes above the upper second would start. This is more of a mean revert back to the highs from a volatility standpoint. And if it starts to actually close above the upper second, then the next logical area is 70K to the next area around $71.5 to $72,000. So then we could see this start to flip. I'm curious actually for the 3-day where the what kind of a position. Yeah, so this is telling me that beware of first pass rejections in these areas. Doesn't mean that necessarily it's the outlier here, because the 2-day, the daily volatility is moving up, saying that it wants higher. 2 days there, 3-day is the outlier between those time frames, and the 4-day is already ready to go. So the 3-day is saying exercise a little bit of caution at the resistances and make sure it's a bullish pullback. Essentially, if it does begin to pull back, 4-day is already kicking off expansion to the upside. It has to close this though to lock it in. No, it already did it last week. I'd want one more closure. So this next closure, because it was about here, so the etchings of it, this next closure would do it. That does mean in the way that I play this on pullbacks, I'm hunting for longs on pullbacks when I see something like this, but I need to see the next 2-day close and it remain above the moving average for volatility here. A little bit of insight into the way Landy looks at things. Let's look at the 5-day real quick here. 5-day just opened. Yeah, so this isn't quite ready yet. It's giving us an early signal for those that like to front run everything. But we need to see at least one more 5-day closure to lock this one in for upside on expansion and the moving average pointing north. We have, Stoke already pointed up 64,200. Hey, guess what looks like the same number, 64,250 on the daily. So same area for the 5-day. Looking good. I want to see nice, strong, bullish pullbacks, not losing that 64 area, especially on like a 5-day. Can it test down at Wakefish? Sure. But anywhere below there, it's going to look nasty. Closes above the upper second on the 5-day, which is coming in at $69,500, basically $70,000, because as price pushes up into this, in between the 5-day closures, when the candle's live like this, we will see this oscillate around. So basically I need to see above 70 and above the upper second on a close, and we're looking at the highs and higher for the 5-day. That would look really good. And, the 5-day just locked in a very nice higher low structure, automatically in higher high territory. So the trend reversal is on. It's not complete trend yet. We need to see another higher low on at least a swing. And then of course, higher high from there to complete the trend. But Bitcoin sometimes will just truncate the trend and just go for it. Is it ready yet? It's saying that it's getting close. That doesn't mean that it's locked in. We have to meet the conditions. Weekly's the same thing. We need to see the Sunday close. Man, Sunday close back above the upper first would look really good. Then we're targeting, 70 to 72 up here, and any closes above the upper second going to look beautiful for expansion on the weekly. This is not ready yet. So while the lower term timeframes are gearing up, we have that 3-day as the outlier. What the picture that's being painted for me right now is that, like, hey, be aware of these lower term time frame rejections. If they turn into something more, especially below, some of the pivot numbers like $64,000. And remember, there's that top side of the recover zone right there at 63.8. We don't want to see that lost under any circumstances by the bulls at this point. But pullbacks in and around those pivot numbers at 64, 64.5 are fine. Even a wick fishing down to 63.8 is fine, as long as it's not closing below, around 64.5, 64,250 or so, like we saw on the daily and 5-day. Pullbacks down there are fine. It can even screw around down there and scare the shit out of everyone that's bullish. But realistically, bulls need to shit or get off the pot for this particular move, right? So I would like to see them start to close this in a strong manner, especially with this higher low potential on the weekly on a swing and a close. Like I had mentioned on Monday, close above 64.5 is going to lock in a low, right? But I still need to see it at minimum for continuation like it's getting right now, above 65,600 and especially above 66,550. For the swing to be locked in, it just needs to close above 64.5, although that would technically paint a low on like an RSI indicator, and many people would call it the low. I like to see closing lows thereafter that close above 65,600. This week can absolutely do that. It's still early in the week. We still have quite a few days to go, 4 of them, in fact. So just understand the context. Closing above the upper first would look really good as well, and that's sitting at 66,730. And then that would look great on Sunday. So we'll follow up with this on Friday. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.